Let's welcome on board Deven Choksey and talk about the market mood with him. Deven, hi, good morning. Great to have you on the show. Have to talk about Bajaj Housing Finance listing first, right? One of the very few companies to make it to that 1 lakh crore rupee market cap club right on its listing day. But Deven, for those who are FOMOing and want to jump in into this frenzy after a 3x move as opposed to its issue price, what should they do? Would you recommend patience to them, or would you say any time is a good time for this one?
Yeah, Aisha, good morning. Well, let me put, I think, some of the facts before all the views. The company has debated with about 12% holding out to the public shareholders. 88% shareholding is still continued with the promoters, that is Bajaj Finance. So obviously, the floating stock in the market at 1,20,000 crore market cap is just 12%. So that is what I think it explains that about 14, 15,000 crore worth of floating stock is existing in the market. Beyond that, I think it is not available in the market, against which every single fund probably wants to buy into the portfolio this particular opportunity largely because of the fact that I think they are growing at a compounded rate of growth of around 30%, which means even if today the stock is quoting at 7.5 times price to book value, I would think that I think at 30% rate of growth, if you average it out 3 years forward, this is basically valued around 3.5 times. So frankly, I think from that perspective, when you compare this company with others, it may sound a little bit more expensive, even at 3.5 times price to book value 3 years forward. But still, I think given the kind of diversity of the portfolio in the business model, this company assures that they are going at around 30% rate of CAGR rate of growth. So they are always going to be trading at premium. Given these facts, I believe that if market is kind enough in giving you opportunity to buy at a lower level or any fall or any dip, that would be, I think, a right time to buy into the portfolio. Yesterday, of course, I think post listing the stock went into the upper circuit. So certainly one will have to wait for the circuit to get released and buy on this particular stock in the portfolio. Though it is expensive, we are buying slightly at a premium for a good quality stock in the portfolio.
I'm just scanning through lots of stocks here, and exchanges did very well for themselves yesterday. MCX, BSE, CSDL. Devan bhai, what happened yesterday? Suddenly, suddenly everybody's realizing something different. It was not that it was
Ah,
something big on terms of regulatory change or volumes went up, but BSE going up 16%, MCX up 5%.
so maybe I think, Nikunj, my understanding is that other day we hear the NSE basically coming up with or basically getting the clearance from SEBI for the IPO. SEBI approved the increase in the authorized capital, also to effect, I think, the bonus and maybe I think also to effect the IPO related requirements. So obviously, I think NSE is expected to visit the market with around 1,50,000, 2 lakh crore kind of market cap eventually. So obviously, I think the catch-up effect is happening to the other stock exchange. That is what we are first realizing. Second thing, many of the funds are basically having space to create a space to basically buy into the portfolio. The intermediaries within the BFSI space, which includes the exchanges, which includes the depositories, even custodian service providers among them. So obviously, I think that is where probably I think the buying has happened. In my viewpoint, you are absolutely right. I think there is nothing exceptionally changed, I think, as far as the business condition or the outlook is concerned, except the fact that the long-term outlook remains absolutely very strong and convincing. Market capitalization likely to rise from $5.5 trillion to $15 trillion somewhere in next 15 to 17 years. So probably I think that is where we are likely to see a higher amount of participation also in the market. But having said that, yes, I think it is the requirement of adding such kind of intermediary stocks in the portfolio, which is where probably I think they have ended up buying some of these large companies, including the exchange companies in the portfolios.
Why this entire financial inclusion story, whether it is CDSL or MCX or BSE or for that matter, NSE in the unlisted market?
Yeah, I guess I think more importantly, these kind of businesses are not easily available in the marketplace. It is the first rationale. Second rationale among them is that the size of the businesses are growing. NSE is already the largest exchange in the world today in terms of volume that it is handling. So from a perspective of, I think, looking at the larger amount of space with the higher market capitalization, it is going to be a preferred destination for most of the investors going forward, even from the global space. And quite possible that the SEBI might relent some part of their rule as far as the ownership in the exchange is concerned, which is currently capped at 5% for institution investor in the exchange business. So that kind of guideline quite possibly, I think, change eventually once the NSE gets listed. So all in all, put together, these are some of the rationals, I think, where the liquidity is going to be abundant for buying into the portfolio. The larger companies, the market participants like exchanges, market participants like depositories in the portfolio. They are not easy to come in the market businesses. They are regulatory driven businesses. So certainly, I think the supply side is always going to be short as far as these businesses are concerned.
Motherson Sumi, the QIP has opened today. And Devin, what are your thoughts here? I mean, 2 days ago, we got this profit warning from from BMW, not DLF, from BMW. It was followed by another one, I think, from Porsche. JLR also is saying that July would be tough for them. Does it make sense to buy into Motherson Sumi, given that there is a global tailwind which has now become a headwind for luxury automakers, and that is the mainstay for Motherson Sumi?
Yeah, I think it's going to be a challenging environment for the auto ends companies. As of now, I think the slowdown has actually started affecting them, but not much. I think they're still completing the order book which they probably carried along. I'm talking about even Indian markets where we have seen some amount of lower uptake for passenger vehicles in the last couple of months. The same thing is applying in the global market. I think over there the situation is becoming slightly more challenging as well. So auto ancillaries are going to have a challenging time going forward. Only saving grace for them would be that the raw material prices are coming down. So on one side, if your input cost is coming down, and if the demand scenario is not going down so badly, then probably I think you hold the chance of maintaining the margins and the profit at the bottom line level. That is the only saving grace at this point of time for most of the automobile ancillary. But otherwise, I think if the in situation turns around for better, then definitely I think they give a proper direction that I think they will go up. As of now, in my understanding, this financial year, couple of quarters, I think we are likely to see the struggling time for majority of the auto ends, and that may be a good time for some investors to buy into the portfolio. Those who are looking beyond 2 quarters, so I think for them it will be a good time. That's a challenge that we'll have to accept it, I guess.
Okay. I'll tell you a mistake I have done in my life. And a lot of people ask me this, that, oh, Nikunj, what's that one thing which you've learnt and you've not implemented? And that is power of compounding. I started talking about it on television, but in real life, I implemented, not in just financial markets. Compounding works for habits. Compounding works for everything. If you start gradually building on something, whether it's a good habit or a bad habit, you can actually make wonders. I've been a television commentator for more than 20 years now, and we understood the whole power of compounding, let's say, very early because of experts like Deven Bayan who've always told us magic of compounding. But in real life, I've implemented it very late. And that is something I would urge our viewers, that if you're young and even if you're old, doesn't matter. 15 years is a lot of time to compound anything. So if you're old or young, if you're middle age or even even in your early 20s, if you're watching the show, please understand the power of compounding and just endorse it. Whether it is Buffett or Rakesh Junwala, whether it is Nimish Shah or Akash Bansali, whether it is some of the best global investors, they just believe in one thing: power of compounding. Power of buy and hold every time really works. And Devan Bhai has been owning some stocks which he's been holding for what, 10, 12, 15 years now. Which are the stocks, Devan Bhai, which you've been holding from 15 years now, or more than 15 years?
I think the entire TVS group we have been holding for more than 30 years now. Bajaj Group we have been holding for 30 years plus 40 years in fact for Bajaj Group. Reliance has been in the portfolio for last 25 years plus. So yes, I think you hold these companies in the portfolio largely because of the fact that I think their businesses are steadily growing. We are not looking at, I think, very exceptional return. Like on one side, the HDFCs and the Bajaj kind of companies, particularly the finance fields, I think they've been growing at a compounded rate of 30% in their early years, and they continue to do so in some cases. In case of Bajaj, particularly, they continue to do so. The southern-based companies, I think they would probably grow relatively slower. They would grow between 15 to 20%, but they still grow between 15 to 20% in their business, and that is more important. we actually look at, I think, how much of the free cash flow these companies are deploying in building the capacities for future and whether this would continue or sustain the growth rate for them. You talked about compounding in the portfolio. We look at the compounding in the balance sheets of the companies. I think if they probably start putting money in building the capacities for future growth, and if they keep on doubling the size every 3 years, 4 years, I think we love this kind of companies because this is where probably I think your money remains safe. And most importantly, because of the discipline that they follow, they normally do not come back again and again to the shareholders for asking for money. They normally, I think, use the free cash flow from operation to build the business further. And that's what we like about this kind of companies.
That really is a testament to patience and discipline and reaping great returns and compounding your wealth, Deven. Meantime, Deven, given that we were talking a little bit about Ola Electric and what the brokerage community as well has to say, that they're building and transforming the two-wheeler on an electric theme, and Nikunj was alluding to the fact that it's, of course, more viewed as a tech company as well. How would you look at Ola Electric's D Street debut and the journey that it's had so far, what it means for some of the other players as well?
It's a very important point. I think the Tesla, having studied Tesla from since last 12, 15 years now, I believe that I think this company was always promising to become more of a platform provider compared to a software company than a car company. Actually, I think it turned out that way. Today, I think by selling the software-based solutions, I think they are getting more amount of profits in the balance sheet. Vis-a-vis, I think the profits are from the selling of the cars. A similar situation is happening big time, I think, for even automobile companies. I think they are talking about significantly putting across the technology in the forefront and allowing the vehicle to not only become safer to drive, but at the same time, I think more convenient to drive. The same thing is happening apart from Cola. Bajaj is implementing a similar kind of a roadmap. Even companies like Minda Corp, who is supplying this kind of technology, they are also implementing the solutions for their OEM customers. So we remain distinctly clear about it that I think unless you provide the convenience to the driver, to the user of the vehicle, probably I think will not stand a good chance to continue with this kind of a program in the business. Good part is that Ola, Bajaj, TVS, Hero, each of them are actually following in the two-wheeler space. I think this particular program. In four-wheeler space, I think majority of the car companies are following this particular program. So we believe that I think eventually the software part of the valuation, which is not getting factored into the business of some of these companies, would start getting valued. The hardware part, which is battery in the case of electric vehicle, is already a rent a battery kind of model has already emerged from the MG, which has launched its new vehicle. So I believe that I think that's the way forward. That you bring down the cost of the vehicle by way of keeping the battery aside and you give the battery on a pay-per-use basis. I think that is where probably I think major disruption is happening, and some of these two-wheeler companies are already into it. Even companies like Bajaj Finance is financing the battery today, as far as I think this particular activity goes. So yes, it's going to be a very very interesting space, and many of these companies are likely to show relatively better picture going forward.
Bajaj Finance, interestingly, did not participate yesterday. Whereas if one really looks at the sum of part valuation, Bajaj Finance and Bajaj Finserv, they would be two of the biggest beneficiaries there. Not too many newsmakers. I'll address SpiceJet in the pre-open rate. These are pre-open rates. SpiceJet, Motherson Sumi, Bajaj Housing Finance. We're so used to saying Bajaj Finance that the word housing has to be put in now to identify two stocks. Bajaj Housing Finance up another 10%. Hello. What was the delivery yesterday? Let's look at it. 50% of the stock yesterday was marked for delivery. And that's a lot of delivery volume which is getting marked. I mean, imagine for a stock which just had a cracking debut and it just saw 20% of the shares getting marked for delivery. That is incredible in terms of where the institutional interest was moving into Bajaj Finance. And it actually has seen delivery volumes which are higher than Ola, higher than Exigo and lower than Honasa, but Honasa was a very different era, so to speak. But 50% for a size of 1 lakh crore to get created and 50% getting marked, which means the appetite is not done yet. Pre-open rates aren't indicating anything. So Deven, give us a stock idea. It may not compound at the rate at which, let's say, Sundaram Fasteners or TVS has compounded, but next 5, 7, 10 years, one stock or two or three stocks, you will buy them and you will not sell them.
So I think currently we continue to put preference on companies like Tata Technology. In the COVID times, I think we ended up picking up companies like Tata Elxsi. We believe that I think if you keep your investment portfolio intact for these companies, I think for next 5 years plus, probably I think you hold a very good chance. Company like Tata Technology is basically, I think, available, of course, at a slightly premium valuation. So it's not immediate kind of a gainer for many portfolios. But the fact remains that I think the entire business model is starting from designing stage onwards to distribution stage in the vertical in which they are operating, which is auto vertical. They are systematically adding the aviation vertical, which is currently 16% of the portfolio revenue book of the company, which is expected to become 35% of the revenue book of the company down the next 2.5, 3 years from the management committee that is going to learn. I believe that this kind of companies they offer you a deep value investment opportunity from investment perspective. Of course, they are not cheap; they are expensive at this point of time, and that's the reason for which I think there is not so much of buying interest in money in this kind of companies. But I think it's a game of patience. Probably, I think you buy expensive, wait little time longer in the initial period, and in the subsequent part of the period, I think in investment, I think you end up getting your rewards, which is what I think this market is teaching us. So certainly, I think this kind of companies we like to invest in the portfolio. Apart from there, many other companies, of course, which we can talk. And let me put it a disclaimer, Nikunj, that I think this is not a recommendation. So investors should not simply jump into it. This is only, I think, an example which I put across. Maybe I think your study is important on the subject before you use. That's a disclaimer that I would like to say.
Right, okay. Deven, so good to have you on the show. Thanks as always for taking the time out
Thank
and
you.
speaking with us.
If you like this video, then like, share and subscribe to ET Now.